Well, I think the real news was the strength in average selling prices for the iPhone. They were much better than expected, and certainly relative to our model, and I think most people's, that accounted for the entirety of the beat and the vast majority of the guidance raise for next quarter. And so what we're seeing is a product that is resonating with consumers, despite the fact that it has a high price point. And many people, ourselves included, were worried about the traction that the iPhone X might have with consumers at that price point, and Apple's proving us wrong. iPhone X sales were very strong. They were the best-selling unit every single week of the quarter except for one, and they have been every single week of the cycle except for one. And I think that's a testament to the fact that Apple has a great brand name, and they're delivering products that consumers want. And it's not translating into great unit growth. Units will be about flat for the iPhone this year, but the company, in virtue of the fact that they make good products and have a good brand, is able to take price. And that was really the story of the quarter.
Why not upgrade the stock then, Tony? You're still sitting on market perform.
We are, and we lowered our rating earlier this year. It was a bad call in hindsight because we thought the cycle would be weaker. And as I mentioned, Apple's proven us wrong in terms of its consumer following for this kind of price point product. I think in the near term, the stock is likely to continue to go higher. As you all mentioned, there's a big buyback force. Apple's buying back about 6% of all shares traded right now, which provides a buy bid. Historically, the stock has done well going into new product launches, and we'll have new iPhones announced in September. And the services narrative continues to be pretty good. And I think it's much more likely that iPhone pricing goes up again next year, and that's not in current models. So those are all really positive things, and I think in the near term, the stock could continue to do well.
Does that mean you're going to upgrade it? You just didn't make the move yet? I'm sort of confused. You're painting a picture of someone who just upgraded the stock, but
right.
Yet you're still holding firm. Help me understand that.
Yeah, I mean, we don't change our ratings very often, so we changed our ratings once in 11 years on Apple, and that was earlier this year. And the reason we did is because when we look forward, we do worry about the fact that iPhone units have been flat to down for 4 straight years. And as much as Apple is taking price right now, and we think could take price again next cycle, it's unclear to us that that's sustainable. There's no precedent among any consumer electronics company, including Apple. If you look at iPod, you look at Mac, you look at iPad, prices have gone down on all of those over time. And so if you have flat markets and ASPs likely to go down over time, that makes us less confident about the sustainability of growth going forward. So that's our longer term perspective. Certainly within the near term, the company's executing very well. The stock can do better.
Is it possible, Tony, that Apple's best days are actually ahead, and we just need to look at those metrics a little bit differently?
Well, Scott, I think there's a bit of a semantics question about what defines best days. I think from a stock perspective, this is a stock that went up tenfold in 10 years or something to that effect. I don't think that's going to happen in the next 10 years. So from a stock and investor perspective, no, Apple's best days are behind it. Now, from a, can the company get bigger than it ever was before? Absolutely. Absolutely. So there's a bit of a semantics to your question about what defines best days.
I understand. And I bring it up just simply, and, people question the innovation or lack thereof. And maybe the greatest innovation of the modern version of Apple is having such a powerful other revenue stream develop in this services business, the likes of which is remarkable in its own right.
Yeah, I mean, kudos to Apple for using its installed base and developing a set of services around it. And that includes, licensing revenues that Google pays Apple to be the default search engine on iOS. That includes iCloud. That includes, Apple Care services. That includes Apple Music. So the company's done a really nice job and of course, the App Store a really nice job at building a set of services around that. And I think, to me, the really core investor question over the next 5 years is, can they continue to develop new services? Because services are a function of two things. They're a function of the installed base of phones, and that growth in that is slowing because units haven't grown much over the last 4 years. They haven't grown at all. But if you can introduce and continually introduce new services that you can sell into that installed base, that's a very attractive financial model. And so that's really the operative question is, do you believe that there are other services that Apple can hang on to, that can sell into this really, sticky and loyal customer base? And if it can continue to innovate in that way, then the company can continue to do well going forward. But to me, that is the central question.